Hello, listener. You are welcome to Student Score Booster, your online tutorial class for your JAMB, WAEC, NECO, and the NAPTEP examination. This is the accounting class where we're trying to give you the nitty-gritty of what is required to have a better grade in accounting, or the principle of accounting, or the financial accounting, as case may be, for the A level or the A level and the O level student. Today we shall continue from where we stopped last time. The last time, with this, in lecture number 4, we talked about the way and manner of preparing cash book, and today we shall discuss the concept of bank reconciliation statement. And my name is Mutolib, your anchorman of this subject. At the end of today's class, we are expected to have a brief understanding of e-banking or e-banking system, and be able to understand some of the frequently used instruments to carry out bank transaction. Then we shall be able to understand some of the reasons where we have some discrepancy or differences between the bank component of our cash book. Remember, our cash book has the bank component, as we discussed in our lecture number 4, and the bank statement given to us by our bank. I told you last time that when you open your own bank account in your cash book, your bank also open another equivalent account for you in the banking hall. So we expect that these two accounts should have similar entry, and they should have the similar balance. But most often we discover that, or it always happen that the difference between the two, the balance between the two are always not the same. And that is why we are going to look at the causes of that discrepancy or differences. So having appreciated the differences, we'll be able to reconcile these two balances. That is the major aim of this particular class. I will crave your indulgence that you should visit our website and listen to the previous lecture, especially the lecture number 4, where we discuss some of the components of cash book, where we lay more emphasis on how to prepare the cash book, and we explain to you in that video the way and manner the cash book is being prepared, the type of cash book, and so on and so forth. Now today, the first thing we are going to consider briefly is the issue of internet banking, or we call e-banking. Of course, we should be able to appreciate these are two different things. When we talk about internet banking, we should be able to appreciate what's the difference between the two. The electronic banking, otherwise known as e-banking, is a process of using automated teller machine or telephone, but remember, not via internet. Please, you can just call your bank officer or account officer. You are not linking with internet, just to call his or her number, or you call the bank to make inquiry, not using internet. It's a more form of electronic banking. Or you have your debit card, where you can use to withdraw from either the ATM machine or some other maybe POS, as case may be. This is what we refer to as electronic banking. However, the internet banking, on the other hand, is use of a PC, that is a personal computer, and you must also link up to the website. It involves basically the use of internet. Please, let's take note of these two. I just take it off because this aspect of syllabus is something that we used to on day-to-day activities. So I'm only interested in trying to distinguish between these two components. That whenever you have internet banking, you are talking about the use of the internet facilities, like your modem or the telephone line that are connected with the internet service. Take note of that. But for the e-banking, you don't use internet. it's not through internet. You know, if you go to, for example, if you go to ATM machine, ATM, sorry, the ATM, you use your debit card there, you can, or your Visa card, you can just get your money. You are not using internet on your own. Though bank might use internet on their own, but you with the bank, you don't use any internet at that particular time. It depends from you transfer money online using your internet facility. That might come under internet banking. So that's just the little thing I want us to take note of. Any other thing under this particular thing is what I believe each and every one of us used to know, or we are practicing on daily basis. Now, the next thing we are going to discuss briefly is to look at the some of the items that are being used to carry out the banking transaction. That is the transaction between customer and banks. What are those items usually used? Of course, they are not limited to this. I'm only trying to highlight the following. You can also read more in your economics and commerce textbook, especially the commerce textbook under the banking. You can read more of those instruments. One of the instruments we are going to consider, number one, is currency and deposit. Here is the cash, the liquid asset. That's the most liquid financial asset. When you go to the bank, you deposit your money or you withdraw money, we are talking about the currency or deposit. Either you call it deposit or you call it currency. Currency and deposit are most liquid financial asset. Financial asset is any asset that can be used to carry out, or any document that can be used to carry out financial transaction. One of them is your cash in your pocket, or the cash you hold at a point in time to buy anything is a financial asset, consisting of money, the note, that is note, like 1 naira, like 20 naira, 50 naira, 100 naira, $1 dollars, and so on and so forth, maybe $100, $10, and so on. The coins also, that 50 kobo, 10 kobo, 50 cents, 10 cents, 5 cents, and so on and so forth. All the type of deposit in national currency or currency, these are what we call a currency and deposit. Another item of most of frequent document used to carry out transaction with the bank is check, and is also is the most common instrument of credit. You give somebody check, you can receive check, you can also give somebody check to carry out transaction on your behalf. They almost work like money. Remember, it is written order on a printed form by a depositor or a drawer to his bank to pay a sum of money to him or to somebody else. You can issue your check, or you can issue to somebody else check, and whose name is entered on it, or the bearer, that is the man who holds it, the last drawer, that's the last person there. You do more of this in your commerce. I think the commerce, those are do commercial courses, and there is more or less related to accounting. You can do more of the type of check, the party involved in check, and how the check is being cleared when you go to bank. Another item is bank draft. A bank draft is a check drawn by a bank on its own branch, that is the bank, not drawn by the bank itself on its own branch on another bank, requiring the letter to pay a specific amount to the name, to the person name in it, or to the order the order thereof. Take note, the check can be issued by individual, whereas a check in form of issued by a bank on another bank or on also another branch is what we call bank draft. The other item of frequent use here is bill of exchange, especially those that are doing import and export business. Bill of exchange is used in internal as well as foreign trade. It is an order by a seller to buy, or by a creditor to a debtor to pay a certain sum of money to himself, or to a bearer, or to other person named therein. As I said, I brought this thing so that we have little knowledge of this, just to try to bring gap between this subject and our commerce. We do more of this in a commerce. Bill of exchange can be issued just to somebody, will collect it, and somebody other one we also accept to pay the bill as case may be. You can discuss the type of bill when you come to your commerce class or economics class as case may be. But here is just for us to know it's an instrument that are being used to carry out bank transaction. The last one we are going to look at is letter of credit. The letter of credit is an obligation to make payment against document received, or the amount to be paid upon receipt or document because become liability of the bank. Letter of credit are used to finance international trade operation. This occur for the importer. If you want to go out of country to go and import something, you can collect letter of credit by your bank. Your bank is promising the other bank or the other customer through his bank that you, as a bearer of this particular letter, you will not default, and in case you are default, your bank will be responsible. That is the most important document. So we must appreciate that these are most frequently used. There are more than these, but of course these are the frequently used one, both the local and for the international transaction. The next item we are going to consider is that last time we discussed the bank statement, what we call the cash book, and I told us that the cash book has two components. Today we are trying to kind of come up with another concept. This is my cash book. Remember, it has a bank and cash column. That is majorly 2-column cash book. Then I have a bank statement. Bank statement is the one that the bank usually give us. When you go to bank, if you have account with bank, you can request for your bank statement, they give it to you. So the major problem is that the balances from these two components are, they don't agree. That they are not always agree. Okay, there are various reasons for this. The statement is used to reconcile the two balances. Of course, if they are not agree, you might be thinking that maybe your money is not complete, or the bank is sitting himself, or you are sitting, bank is trying to shit on you. No, what we need to do is to try to see what will have caused the discrepancy between these two. That's what we call reconciliation of these two documents. And these differences might due to the timing difference. For example, maybe at the time you give somebody check, the person refused to take it to bank because maybe bank has closed. Already when you give a check, you already credit your bank account in your own document, expect the bank to also debit your account with them, but the person refused to take it to there. Probably he's very sick, he has an issue, or even forgotten, for example. With that, your balance in your cash book will not be the same thing with the balance you have in the bank account. So by the time you ask for your bank statement, you may end up see that something is, maybe you are expecting more than what you have, or you have more than what you are expecting. The timing difference, the omission or error made by either the bank or the company itself, that is you, the company itself. The bank balance of bank statement and the bank account in the cash book really agree. That's what we are saying. Please, bank statement, not the cash component of the cash book, but rather the bank component of the cash book. As I told you, please kindly revisit our lecture number 4 so that you'll be able to know what the component we are trying to talk about. Now, once we observe that these two components disagree, then the next thing to do is to try as much as we can to reconcile them by taking out what are the items that make these balances not to agree. So some of these items is what we discuss in the second in this next slide. Now, one of the items is what we call uncredited item. They are deposits paid into the bank. This item occur too close to the cut-off date of the bank statement, so do not appear on the statement. Please, uncredited, when you say something is uncredited, these are items that you are taking to bank, but the bank have not recorded it in their record. Probably maybe due to the time or what we call a cut-off date. For instance, if you send a document to bank maybe a day before the month end, the possibility of that item not appear in that particular month statement is very high, because maybe before they finish all the processing here and there, they have already cut off the date for that particular month, then that item will appear next month. However, if you collect the documents, let's say in May, for example, you send your item 29th of May to bank for maybe for payment to somebody, and the bank didn't take this item into consider on the 1st of June. If you ask your bank statement, the bank statement up to the end of May, that item will not appear in your bank. You have already take it to bank as a deposit. That means that you have already put that particular item into your own cash book, but it's yet to be credited in a bank account. You have debited in your own cash book, but not yet credited by the bank. The other one is unpresented check. These are checks issued by a company that have not yet been presented it to the bank for payment. This one I'll give an example. Last time you gave Mr. A, let's say, check on let's say 27th of February, for example, and Mr. A, instead of going to bank immediately to go and log the check and collect the money, he wrote the check till, let's say, the 3rd of March following month, and you want to look at your balance as February ending. That particular check you give to Mr. A won't have been presented to the bank. However, you will have removed it from your own cash book by crediting your cash with bank component of this particular item. So that is the example of this particular unpresented check. So take note, these are things that can cause differences between the cash book and the bank statement. The other item is standing order. A standing order is instruction from the firm to bank to make regular payment. You can ask your bank to make regular payment to some people over the year or over the every regular interval. For example, you ask bank to pay certain amount of money to somebody every month. Probably you might forget that in a particular month maybe you have not taken note of that standing order, but bank has already effected it for you. Then you might that might also cause differences between the two balances. Then we call direct debit. Direct debit is the payment made directly through bank. Bank just go to the bank, you pay the money without effect it in your own account. Then the bank charge some money exactly when you're operating a current account. They will charge you COT, that's a cost of turnover. Then commission of turnover, sorry. Then they also have what we call banks, that's the bank charges. Then the honor check. A check you already take to the bank, maybe credit to the bank already, but at the end of the day, the person that issued a check defaulted without, maybe doesn't have enough balance in his account. So when your bank presented the check, maybe for clearing, it reached that level, discover that the person does not have enough money, then they will return back. Or the check you give somebody a check, for example, and there's a mistake in the name of the person, or there is a particular mistake, or the date of the bank is already a stale bank, a stale check. These are things that can make the bank to dishonor the check. This will also call discrepancy, because you might not know on your own that the bank did not eventually honor the check. Then credit transfer or direct credit. These are collection from customer directly through the bank. Probably maybe your customer pay regularly to bank. That's the opposite of the direct debit. Direct debit is that you are paying the money directly from the bank. It's very close to the standing order we discussed last time, but this one, you don't give order. It just came once in a while, not like standard order that is always there regularly. Then the credit transfer or direct credit is like you always allow your bank also pay some money on your behalf. Then interest allowed by bank also gives some interest. So these are things that we need to take note that usually cause differences between these two what do you call it, account. We can more than this, but at least if you understand this one, we're able to know. So having appreciated that these are things that cause the differences, how do we reconcile whenever we have this? That's the major duty or the major task we are trying to do in this presentation. Now, before we move ahead, let's look at the some past questions so as to be able to appreciate what we are trying to do. Here is the JAMB, the UTME 2012, question number 12. The examiner asked a question here that cash can be withdrawn from bank using bank teller, credit card. Credit card is not meant for withdrawal of cash. Research card is very silly. Then ATM card. I think ATM card is the correct answer. The examiner also asked us, in a modern day banking system, cash can be transferred or cash transfer cannot be made. That is, we are talking about the modern day system, banking system, that is today's banking system. For some of us that we know banking system before now, we don't have ATM, no online transfer, we must go to bank and queue. But today you might not even go to banking all for a year. So we had asked, examiner asked us 2012 question number 13 in JAM, that cash transfer can be made where the transferor is somebody that is transferring the money. Transferee is the one that is receiving the money. In case the examiner want to maneuver this question subsequently. Now, if you have no sufficient, that is, you cannot make a transfer. Let's take note of this. Cannot. You cannot make the cash transfer if you have no sufficient cash with your bank, has no account with the bank, does not reside in the bank country, does not possess domestic currency. I think let's start from here. This one is not there. You can transfer money using any currency if you have facility with your bank. Okay, if you finish your degree, for example, you want to write ACCA, for example, you can easily pay your ACCA in pounds using your account in Nigeria. So you don't need to know to have a currency in pounds account before you can do that. Your bank will do it for you. Does not reside in a bank country. Must you reside in UK before you pay for ACCA exams? No. Then has no account with the bank. If you don't have account with the bank, you can open to the bank. Bank will transfer the money for you. They charge you. The only thing that if you have account, you might have a lower charges compared to somebody that doesn't have account. Then you cannot transfer more than what you have. If you don't have sufficient cash in your account, you cannot transfer. Even the system will tell you that you have no sufficient balance. Except if you first of all approach your bank, they give you some facilities. Then they will take it to your account to have sufficient balance because you can transfer. The option there is A. So in 2010, question number 13, the bank charges levy on the current account holder. Remember, when you have a savings account, you receive interest. But if you are operating a current account, as holder of that particular account, bank will charge you certain amount of commission on over the time, or finally every month. We call it COT. Now you can see what examiner is trying to find out there. We all know the COT is COT. But what's the full meaning of COT? That is what they are looking for here. So please, as a student at this level, we need to be very, very specific. You know, COT, we have charges on transaction, charges on turnover, on transfer, on cash received. Is COT, you cannot, this one is no longer there. Cash on transfer, you don't need to, even if you don't carry out any transaction, then you can, if you don't need to transfer before they charge you the charges. Therefore, turnover is, transaction is small, you might not even carry out transaction. If once you keep it for you, they will charge you for maintaining the account for you. It's form of turnover. So it's cash on turnover, charges on turnover, that's COT. In 2015, the examiner asked us, that's the UTME, we are still on UTME. The examiner asked that an item credited in the bank statement, but not yet recorded in the firm cash book. A certain amount of money has been paid, has been credited to your bank statement, but it has not been credited, or it has not been recorded in your bank. If you are to record in your bank, it will be on debit side. Are you okay? So now they say bank loan. If you apply for loan, you collect your money immediately. So they cannot give you a bank loan without collecting the money and take it to your account. No. Then contract payment. We have not mentioned standing order. Standing order is the one that has been debited into your bank account, because when you make a standing order, the bank will debit your account in their record. You credit your account in your own record. The other here is direct deposit. Somebody just pay the money directly to your account, and bank will collect the money and credit it into your account. and that will be the option for this particular answer. If you go back to what we said here, we say credit transfer or direct credit. That is the connection from customer directly, that is deposit directly into the bank, into your bank account, without you know that particular that this thing has been paid, and it can also call discrepancy. In 2014, the examiner also asked question number 14 there, that cash sales, cash purchase, cash discount allowed, cash payment, and cash receipt. Which of these following are recorded on debit side of cash book? Remember your cash book? Let's take 2-column cash book, for example. 2-column cash book. Remember, how does it look like? I have cash, bank, particular, cash, bank. So they're asking me, which of these will I be recorded on debit side? Okay. If I make cash payment, the money is going out of hand, it will be on credit side. If I receive a cash receipt from somebody, it will come here. It will be on this side. If I made a cash purchase, it will also come to this side, because money will go out. Now, if I make a cash sales, are you okay? Cash sales will also come to this side. Now, let's look at the option here. Then we have discount allowed. Discount allowed is also on this side. But let's look at the option we have here. Technically, we have 1 and 2. 2 as take it out. We have 1 and 3. Yes, let's look at it like that. We have 1 and 5, cash sales and cash receipt. Are we okay? Then we have 1 and 4. 1 and 4 is also not there. So let's now. I just want to teach you how to handle this kind of analysis. I have a cash sales. When I make a cash sales, what do? I will record the cash on this, and I will take it to the other side. Then I have cash receipt. When I receive a money from cash, I also have. So 1 and 5 would be the correct answer, because they are the one that follow the double entry principle. Remember, we said cash discount, though it will enter on this side, but it is a memorandum. It doesn't follow double entry principle. So the correct answer here is C, which is 1 and 5. If I make a cash sales, it will enter here. If I make cash, so the one that follow double entry principle, that because when you say debit side, you must also be looking at what will be the corresponding credit side. So the option here is C. Now, this one is for YX students, June 2015. Examiner wants us to describe the following bank statement. This is a document the bank gives to you every month or at a regular interval on your request to show your balances with the bank. That's what we call a bank statement. However, bank reconciliation statement is a statement prepared to reconcile the differences between the bank statement and the bank column of our cash book. You get your answer simple. They explain 5 causes of disagreement between the cash book and the bank statement. I think you can refer to the previous slide. Then the causes of the discrepancies between the bank statement and the cash book that overstate the cash book. Here now, examiner wants you to give us the technical meaning of this. That is, which of this statement you know that we overstate the cash book element. Dividend, if you have a dividend received, it go to bank straight. Uncredited expenses, it will not overstate. Then uncredited check, that is that we overstate the cash book in the cash book, that will overstate the cash book. Then interest on lodgement, this also will overstate your bank balance. Likewise, uncredited expenses will also do the same thing. Then we have unprecedented check is the correct answer here. So you can read more, or you can also listen to the previous explanation we've made in this particular presentation. So I leave you with the following question also, which are from your previous exams, and I believe they will help us to also know more about this. Now I have 4 questions for you there, so that to be able to do more or to better in your exam. Now let's move to the job proper. That is, how do we prepare bank reconciliation statement? Basically, we are going to follow 3 steps here. Step 1, whenever you take your bank, your 2 documents are involved. The first document is your cash book, that is bank component. Then the other statement is the bank statement, the one the bank gives to you. Now, the cash book, you pick it and you compare these 2, check the 2 together, and try to see the item which are omitted from both sides. Which one is here in this document that is not here? Which one is here that is not here? Find out. Once you do that, then you update your document, because it is assumed that the reconciliation should start from your own end. So step 2 is to try to update your cash book. We call this one adjusted cash book. Adjusted cash book. Adjust your own cash book so as to be using the items that are missing from both sides to adjust. Some of the extra items will have added to your cash book, some will have reduced your cash book. You do the same. Then the last is now to prepare your reconciliation statement. So anytime examiner asks you to do this, especially for JAMB student or so for YS student, your mark will be based on these 3 stages. You earn your mark on you cannot just prepare this statement without following the steps here. That is the most important thing you need to take note. So we will now briefly look at one example following this particular these stages we have explained. We have a simple question here I want us to quickly go through so that we can appreciate what we mean here. Now, we are told that a company cash book and a bank statement for December 2014 appear as follows. Cash book. Examiner say bank column only. Please, bank column only. If you are giving other column, you only work with bank column only, because that's the only one that you are trying to compare with bank statement. Please take note. Examiner can also come in exam, give you a 3-column cash book and want you to reconcile your cash book. No, only focus on the bank column only. Please focus on bank column only. Now, the first step we are told, this is what we have. This is our bank, the balance you brought forward or brought down from your December 1. Now, probably Wale pay you this, Tony pay you this, Saratu pay you this. They come to your account in form of check. You pay K. You also give check to Chuku, then you also give check to Moses. And in your own record, you are expecting that your balance in the bank should be 4,008. This is what you have done in this month. However, you remember what caused discrepancy? We talk about timing. So you watch out for some things that happen on this day. They also cause problem because they come towards the end of the month. It's possible. However, it might not also be there, but at least just to give you a clue where you can be suspecting. That by the time you now come to your bank statement from your bank, the bank gives you this. When you received from bank, you will compare your debit side here, please, with your credit side here. Please, let's take note of this. Your credit side and you on your cash book will be considered with your debit side here, whereas your debit here with your inside your cash book, this is debit, will be considered with the credit side of your bank statement. So that's how you trace what has happened. Now, before we even go, you are expecting to have 4,008 in your account, but when you go to bank, or the bank give you the statement, what they told you is that your balance is 1,570. 48 expected, the actual in the bank is 1,570. Yes, wow. How come? And the next thing you do is to see, okay, let me see. Can you let me have it? Let me compare this. Now, the first thing you do is that we want to see what has happened here. If you come, let's look at the bank here. I give Wale certain amount of money, or Wale pay something to my account, 1,000. I will come here, I will expect to see the 1,000. Do I see it? Yes, I saw it on credit side. Good. So Wale here is also good to go. Tony, Tony pay me 2,000. Yes, if I come here, do I have Tony 2,000? Yes, I have Tony. 2,000 is here. Then my Tony is also here. So these two, no problem. Then Sarah 2, I give Sarah 2 1,000. I give Sarah to pay me, paid us 1,004. I debit to my account. Then if I go to bank statement, I should see it here. I didn't see Sarah 2, so I have problem with Sarah 2. Let's take note of that. So in Sarah 2 here, that means that the bank has not helped me to credit this money, but I've already debited it into my cash book account, but bank has not credited it for me in my account. I have problem with Sarah 2 is one of my major concerns. Then I will compare the credit and debit side of this. I gave K 1,006. I must see K when they come here. Do I have 1,006? Yes. Look at it here. 1,006 here is also on this side. Therefore, I didn't have problem. This one is not creating any discrepancy. Then I move straight again. Let's come here. Also, Chuku was giving a check of 700. I will expect Chuku to also come here and deposit. Look at Chuku there, 700. You know, the bank collect the money and pay him, and they debit my account. They will give me a debit alert here. So that one is also out of scope. Now I gave Moses 100 naira worth of check on 29. I also expect to come here and see 100, nothing like 100. Therefore, Moses is also one of the major discrepancies. So I can see now from the cash book perspective, two items are there. This one, Sarah 2, uncredited check. This one, unpresented, because I've given him a check. He has not taken to bank to take. So this is uncredited check, this is unpresented check. So let's take note of this. So this is it. I will now go back again here. Any other thing that I have not talked about? Bank charges, I didn't have it in the account. This is bank charges. Then auto pay rent. The rent are supposed to pay. These two, are we okay? I have not taken note of that. Then I come to the credit side. So all these ordinarily will also reduce my cash book. Take note, because normally they are bank charges. They will reduce my cash. They will be reduce my cash. At the same time, the auto pay also will have reduced my own cash with me, because it's an expense. Bank interest also, I've not recorded them in my cash book. At the same time, credit transfer, commission received. Somebody gave me commission, maybe from dividend or whatever. It has not also been recorded. It will have also increased my cash with me or in my cash book. So the item here, this honor check, also is outstanding. So technically, what will have caused discrepancy now, apart from what we have seen in a cash book, this honor check can also cause it. These two items also cause it. This item also cause it. So this is the first thing we are going to do. So the first step, as you can see, is to identify that Sarah 2 here, as we said, is uncredited item in a bank. Moses is unpresented check in a bank. So other items, they are what? They are both appear in a bank, in a cash book, and in a bank statement. So they cannot, all this one asterisk as we mentioned them, they cannot cause any problem. Now when you also go back again to the bank statement, as I told you, all these items, they are there in your bank statement. We have seen them, this one, and this one. So this was outstanding one. One of them is dishonor check. It might be this one that is dishonor. Do you get it now? Bank charges, these are things that have not been taken care of. Then if you come here also, these are direct debit or to the bank account, or the direct item to the bank account. So we have identified the item that caused discrepancy, that has not. So this item in a cash book here or in a bank statement that has not been entered into the cash book, we take them to the cash book. How do we do that? Let's take the second step to draw up a new cash book. We call it adjusted cash book. Adjusted cash book. Adjusted cash book. Now, adjusted cash book, how do I do it? I will take the balance. Look at the balance I have in my cash book. From the beginning here, I have 48,000. So if I'm to adjust my cash book, I will start from the balance given to me by examiner, 48,000, 4,800. Sorry, that is on debit side. Then if you look at your bank statement, I've told you this commission received was paid directly to the bank and bank interest. They will have increased this amount. So I add them to this side. However, this honor check is a check given to us, and we pay it to the bank, and it was dishonor. So this particular check also would have reduced our money because we have not been able to get the money. So we take it on the credit side. We will have reduced this 4,008. Bank charges will also have reduced 4,008. 250 bank rent we also pay 4,008. So when you add this and you take the balance, you will discover that the balance that will remain is 2,870. We call it balance as per adjusted cash book. As per adjusted cash book. Balance as per adjusted cash book. So this balance is very, very important. Once you miss it off from this point, then you cannot reconcile. So the next final stage, stage 3, is to now prepare the bank reconciliation statement. Let's look at it here. The first thing I will do is to take the balance as per adjusted. Please, it is not the balance as per cash book. Balance as per adjusted cash book. Because I've adjusted my cash book, please take note of this. Because my balance as per cash book is 4,008, if you could remember that. But after the adjustment, what do I use to adjust my cash book? The items that are in the bank statement that are not in a cash book are the one I'm going to use to adjust my cash book. Some of these items will have either increased my cash or reduced my cash. For those that will reduce my cash, I will credit them to the cash book. For those that will also add to my cash, I will debit them. Then I will find the balance. That's what we call balance as per adjusted cash book. Please take note of this. Now, what I will do is to add back unpresented check. You know, this check has not been presented, meaning that it's still our property. The person has not taken note of that. Please take note. Your balance as per adjusted cash book, what we are going to add is unpresented check. Please take note of this. This is the first step, or this is the first approach. Let me call it approach number 1 to this one. We can take another approach here. The first approach is if you start with balance as per adjusted cash book, then you add back unpresented check. Where do you get this one? From your cash book add originally. Add it by the money, you get this one. Then you less uncredited check. Uncredited check, that is bank deposit not yet enter into the bank statement. Uncredited, bank has not credited you, you less it. Then you have balance as per bank statement. Remember, this is a balance as per bank statement. If you go back to your bank statement now, the one we were given by examiner, you will discover that what we have there as balance is 1,570. And when you also come to our adjustment we have made here, you also see 1,570. This is the way to go. With this, you can attempt any question. But at times, examiner might want us to start from balance as per bank statement. That is, this one will be up here. Please, at that point, you will be adding this uncredited check will be added. We now less unpresented check. You have 2,870. We call it one balance as per adjusted cash book. You can see that's the approach number 2. Please, exactly the JAMB student here, examiner might give us balance as per bank statement, and they might even want us to calculate to prepare reconciliation using balance as per bank statement. Please, what you do is to add back uncredited check and less unpresented check. And what we are going to arrive at is balance as per adjusted cash book. But if you take the first approach, you start with balance as per adjusted cash book, you add back your unpresented check. So you can see as per adjusted cash book, add unpresented less uncredited. But if you start from the balance, what you are going to have is balance as per bank statement. If you start with balance as per bank statement, what you are going to do is to add uncredited and less unpresented. Then you arrive at balance as per adjusted cash book. I think this is just the trick involved at this point. Now, I will also allow you to have a look at some of the OBG, the question we have, the previous question we have in JAMB, which I believe we have discussed many of them. You can go over them, trying to see what to do with them. They are straightforward and they are easy to understand. If you really understand the principle we are trying to explain here today. If you are through with this, filling the blank OBJ question, that is a multiple choice question, MCQ, then I will take you to June 2010 WAEC exam, when examiner want us to prepare, that is for the WAEC student, a bank statement. This time around we are giving in words, not in form of table. Ngos Enterprise cash book, so a debit balance. Cash book, please. Your cash book and also a credit balance. You take note of that one because we said last time. If you even saw okay, if the bank statement show that, then might mean you have overdraft. It's possible your bank statement can show that. However, that's in your bank column. Maybe you have overdraft. Now we have this is a balance as per cash book. The bank statement on that day have a credit balance. 442. You were expecting to have this, your bank is giving you this. Then there is a discrepancy. Are we okay? So the first item we are told is that the company, the examiner gave us, we discover after investigation, you discover the following: that the opening balance of the cash book, that is when you are bringing your balance from the last month into this month, of 1,840 was wrongly brought down as 1,000. We call this one error of what? Transposition error. 1,840, you write it 1,480. So you have understated your balance. So if you understate your balance, what will be the impact on your cash book? Take note of that, because this is accounting entry now. I'm supposed to have bring in 8,000 or brought down 8,000, 1,840. I mistakenly brought down 1,408. Find the difference between the two. How do you do it? Is it that difference is going to add to your cash book, or it was supposed to increase your cash book? Take note of that so that we know how to adjust your cash book. A additional check of 300 was not recorded in the cash book. You have a additional check. We have seen how we handle the additional check. Then a check for 3,200 issued to a creditor, one of your creditor, has not been presented. This is unpresented check. Remember, has not been presented. You know how to do it. A standing order, you give a standing order to the bank. What happened to your standing order? A check of 1,002 lodged with the bank has not been credited. This is uncredited check. The other one not presented. A dividend of 640 was paid directly into the bank. Remember, out of these items, some of them will be used to adjust your cash book. Some of them will be used to do reconciliation. For example, your uncredited check is for the reconciliation. Then your unpresented check is also for reconciliation. Other item is for adjustment of your cash book. Take note of this. Then you have a dividend paid directly to your bank statement, has not been recorded in your own cash book. Bank has debit you for its what? Charges. Bank charges also. You see how we used it last time? Then a cash payment of 20 naira has been credited to the bank column of the cash book. A cash payment of 20 naira has been credited to the bank column of the cash book. Let's see what happened. A cash payment was credited to the bank column of the cash book. What has happened there? Error has occurred. A cash payment supposed to be in cash book, but a cash column, or a cash column, you put it on the bank column, because it's not a check payment, it's a cash payment. You must look at the implication of that also to adjust your cash book. Then the bank has debited the check of 4,008, debited a 4,008 to Ngo's account in error. That is, your bank also commit an error here. 4,008 was debited to account. That is, you receive a license, somebody has withdrawn 4,008 from your account. So how do we adjust for this? You are required to prepare an adjusted cash book. I told you, and prepare a bank reconciliation. The first thing we do is to look at adjusted cash book. Now, the first thing is, one, I have the balance brought down. This adjusted cash book. Balance brought down here. How do I have balance brought down? This balance brought down, how do I have it? Look at it here. In my cash book. That's the balance I have in my cash book now. So that is that particular balance here. But I was told that this particular amount of money was mistakenly written like this. So the difference between the two is that I understate my cash book, I had it back. Dividend paid to the bank, I had it back. Amount wrongly credited to the bank, I had it back, because it's supposed to be debit side of this one. Now the next thing is what will reduce your balance. Dishonor check, standing order, bank charges, and I have balance as per adjusted cash book. So this particular adjusted cash book, I wrote it here. Add back unpresented check, I told you. Less uncredited check, I have this. So this is what I have. However, the bank on their own make error. then they have to remove it. Then I have 442. 442 is the same thing as what I have in my bank statement. So I've reconciled it. If you do it and you cannot get this one, then that means that you are having issue with your calculation or the procedure. So finally, I will encourage you to go through this particular, the last question is similar to the first example we have. You go through the question here, trying to go through it. This is a cash book given to us, and this is also the bank statement we have. Then I also provide you with the suggested solution to this particular question, which I believe you can go through them. First of all, adjust your cash book, get a new balance different from the balance you had before, and take the balance to your bank reconciliation statement. That's the balance as per adjusted cash book. Then your unpresented check down, or your uncredited check. So this will bring us to the end of today's presentation, and now we have kind of laid the foundation of this particular subject called accounting. The next presentation we consider the account proper, and we are going to start from the smallest unit of business organization, that is sole trader, or we call sole proprietorship. So we are going to prepare the final account of this particular form of business in our next presentation. We urge you to watch out for this particular presentation, because that will give us the basis, the summary of what we have been discussing in our four previous lecture and today's presentation. And we also will try as much as we can to align this topic with your exam past exam questions, so that we can offer you a lot of past questions and suggested solutions that will guide you to do well in your exam. As usual, we encourage you to subscribe to our YouTube channel, like and share our videos with your friend, and also you can visit our website also, so as to see other important package made for you by this prestigious online tutorial provider. At this point, I thank you for your time and wish you best of luck in your exam. See you the next presentation. Thank you.